Hello friends, in the last trading session, bears managed a carnage of over 450 points for Nifty, which is near to 2.5 percentage over its previous close. In fact, if we check an intraday move, then during intraday move we also saw a flashes below 17,000 as well. But after to that, Bulls managed a smart recovery and closed about 150 points from its previous close. Now, before we study anything, our eyes or our focus should be on Nifty and Nifty future. Nifty closed near to 150, that is 17,150, and if we check future has closed near to 17,000 near about levels. This means that still we have a two trading session for expiry and Nifty future is in discount. This needs to be adjusted in the opening moves today only. So please make a note, those who are carrying their future as well as option positions need to be aware about the difference between Nifty cash and Nifty future. So some price mismatch can be seen and future needs to go into mild premium as well. So those who have carried their shorts may have to suffer accordingly. Now if we see Nifty chart, then on the daily chart our old structure of Fibonacci is getting respected, and in the last trading session we can see that a close is near to golden Fibonacci ratio, that is 17,150 value wise, and ratio wise it is 61.8. Now lower Fibonacci ratio, that is 16,867, can be next target for the bulls, by bears, but at the same time if we apply some trend line, then we can see that a rising channel structure formation is there, and in this structure a lower end is also touched. Now if we apply RSI just to find out whether is there any divergence is in place or not. Divergence needs to be confirmed, but we are just trying to check whether is there any mismatch between previous low and current low, which is not the case. That means still there is some room for the downside provided yesterday's low gets broken convincingly. As yesterday's range was very high, it will be really very difficult for traders to manage the risk today and to take the trade accordingly. Safe traders would like to request, please try to take a trade in next weekly expiry so that they can manage their delta in option trading and they suffer lesser whipsaws. Now if we see during a weekend, those who are following us on Twitter, they do know that on Saturday one tweet was mentioned, one tweet was posted wherein Nifty and Bank Nifty levels were posted, which were giving hint that we are expecting some more downside in both the indices. In fact, for Nifty our target was overachieved, but Bank Nifty managed a dot low of 36,375 and recovered. We would like to request, keep following, keep a track of our post on social media handles like Twitter and front page. Now if we see option chain data, then in option chain at present the structure goes in the favor of bears. Massive liquidation can be seen in 17,000 and 17,500 strikes, and a minor addition can be seen in 16,000 and 16,500 strikes, which is giving a hint that more downside cannot be ruled out, but OI is not that strong at 16,500 or 16,000, which can be considered that we can see a massive downside. In fact, we shall say that if 17,000 strike option put goes above its previous trading session high. Now the previous trading session high for 17,000 put contract is at 200 rupees, which is again really very far from its last close. So frankly speaking, option chain data may or may not give you a true picture. So trading should not be done aggressively on basis of the data because we had a wider range. Now if we check call side data, then still 18,000 is having a highest OI, which will not make any sense. 17,500 is having a good OI, and that can be considered as a support going, that can be considered as a resistance going forward. But if at all you are a proper option trader, then trading in 27.1, that is nearby expiry, should be completely avoided, and instead you should take a trade on next weekly expiry even if you are an intraday trader. Whole and soul, one thing in the simple words, please try to manage the risk in today's trading session and try to use intraday indicators which can help you to have a better trading strategy or better trading. Yesterday's low is an important support level, and if that gets broken, we may see a lower levels of 16,800, and below that we may see 16,700, below that we may see 16,600 and 16,400, but these all are the levels are bit far at present, reason being a trend line support and comparatively weaker option chain data. That is the most important thing that I would like to mention. Option chain data is not that strong, which suggests a downside. Whole thing is, again I would like to repeat, please make a note of underlying and future close. It is having a huge difference that will get adjusted today, and option traders may have to suffer some problem. Please try to keep an eye on future and cash and manage your trade accordingly. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.